the NFP aftermath. So what is the what exactly did the reports give it to the markets that secure the hope for any rate cuts in the futures, right? So it's the first thing. And of course, the second thing is we're gonna talk about whether the CPI tonight is going to be a good news or the bad news. Okay, we're going to explain how we're going to cover on. I'm going to prepare for the CPI later on tonight. And finally, we're going to the charts analysis, we're going to technical analysis, and how we're going to prepare for our game plans for next week or maybe after the CPI. All right, so this is basically what we're going to cover for today. All right, so before we go into deep, I guess Gary can hear me, right? It's all good, right? So let me put on some, see on the text, one moment. One moment. Oh, sorry, let me set up some things over here. See, okay. Okay. All right. So let's go in for our first topic for today. So the first thing, let's cover on the Wednesday NFP a little bit. So let's have some idea on the context for the markets right now. Okay, so what we're going to see after, what was the markets be at after the NFP, and how is the NFP going to be a game changer, or whether it's going to be a game changer or not. So this is what we're going to cover. So let's start with the recap of the boom that dropped on Wednesday. So the market was actually a little bit embraced for a soft number, including myself, actually, because if you look at the ADP and we look at the recently the job data, so basically they have a signs that the US job market is not really that good. But it's quite a surprise is that when we come into the non-farm payroll on this Wednesday, so we got a massive beat over here with a 130K job added, and it wasn't just a headline. We also have the unemployment rates dropped to 4.3%. So what does it mean for us or for the US market? So basically, with that data, with that job data, we could just assume that the recent recessions or maybe like the slow growth in the US economy narrative is actually quite dead right now. So basically, this is the high figure is lingering out or wipe out any hopes that the markets hope for an April cut. So basically, the March cut is from the Fed is not going to happen. So markets actually means they are more like on June, but the April cut is more on like a yes or no for the markets. So right now we are seeing the NFPs on a strong beat. Okay? So this basically kill off the April cuts right now. Even for the June cut right now, it's no longer guaranteed. So it's more like a 50-50 coin flips chance for the June cut. So why? Because if you look at the previous Fed comments, okay, so they are actually hints that they're not going to cut until June, okay, unless the job market is having an issue or the inflation is coming down. All right, and one of the key points they cover on the previous meetings, which is on the on the January, okay, on the January meetings. So Fed actually emphasized that the labor market is stabilized. So it means that for right now, if we are seeing a very good NFP job data right on this week, so basically this kill the hope cuts for now, right? So this gives the Feds zero reason to rush for a cut. They can sit back, relax, and wait and see how is the inflation going to be, right? So the conclusion is the rate cut is officially out of the picture, at least until June. Means that we are most likely not going to see any cuts on March and April meetings. And for June, yes, it's still possible, but it's more on the coin flips. It means that you can still, Fed can still not hurry to cut unless the data in coming months tell us that completely different story. Means that if the inflation is coming down, or the labor markets showing sign of worse, then this would force this would give the reason Fed to cut on June at the most earlier, right? So this is the case for right now. So if you're looking at this, basically when the markets pricing for no cuts, okay, means that they are hoping for no cuts. This usually would be a good thing for dollars, right? So this is the reason why we see dollars having a period of rebound recently, okay, or even a short-term movement going up, okay, on recently, or we say it's that the dollar is actually stopping the recent downtrends, all right? So, but if these were good news for the dollar, why didn't the dollar actually go higher? All right. So basically, these are some things that we could look at, right? So why didn't the dollar explode higher? So this is a tricky part. The first thing is, of course, logically, you would think that the strong NFP means that no cuts and the dollars would go up to moon, right? So we do see the initial spike. Initial spike, we do see that. And then, but then it's really recently pulled back again, all right? And then, yeah, for today, we are still seeing the dollars is actually on quite, yeah, it's a little bit move a little bit higher for today. Okay, so it's still a good sign that the dollar is actually react to the NFP data. Okay, but why didn't the dollars go higher, right? So these are a few things that I summarize. Okay, the first thing, of course, basically the market already priced in, okay, already foreruns. There is no cut narrative weeks ago, okay, especially after the hawkish FOMC meeting in January. So the market has already considered, okay, there wouldn't be any cuts. So with the NFP now confirmed that the March or the April will cuts. So basically this doesn't surprise the markets. So there is no reason for the markets to strongly buy on the dollar. But of course, we are still seeing some profit takings on the recent dollar short, right? So this is the reason why we are still seeing the dollar rebound, but not that strong. Okay, so this is the first reason. And of course, the second thing is that due to the weakness of the dollar, okay, for the dollars to really gain strength, okay, especially on the downtrends, it needs a strong or a very strong catalyst to support it, right? So I believe that the NFP alone is not enough to fuel the breakout. Okay, so and this turns into the third things, right? So now the markets remain on hesitance, means that the previous dollar is actually on a weakness on the downtrends. But then recently the NFP pushed back the cuts, so it should be a good thing for a dollar. But with this, like in the middle, right? The market is actually in the middle, is in the hesitant stage. Okay, so it managed to stabilize after the recent volatilities, but the bull is actually hesitant to push it to a new high without seeing the other half of the equations, which is in this case the CPI, right? So I believe the reason why dollars still haven't go into a strong rebound is because of market still want to wait for the CPI to know whether what is next for the Fed or for the dollar, right? So the basically the NFP tells us that the economy is strong, but it doesn't tell us about whether Fed's going to do what the Fed's going to do next, right? So this would bring us to our second massive catalyst for today. So I believe the CPI is going to be the verdict for the markets next. All right, so this is the case for right now. So for ahead of the CPI, I believe the dollar is most likely going to remain stable at this point, right? So this is where we're going to watch for the breakout later. So we're going to cover the technical outlook later after we complete some of the market context, right? So this is the case for right now. All right, so I guess guys, all good, right? Okay. All right, so let's talk about our CPI tonight. All right, so tonight, actually it depends on where you are tuning in. So for Asia, okay, I'm actually in Asia. So that's 8:30 p.m. for me, okay, and also for my friends in Asia. So of course, if you are in other locations like in the US or some things, so it's actually will start at it will release at 7:30 a.m. Okay, so we'll get the CPI. So over here, we're gonna give you a little bit like simple way to visualize, okay, how we can look at the markets after the CPI, right? So now we're going to talk about it, how we're going to predict or not predict, or how we can look at the CPI, right? So why does tonight CPI matter so much? So I believe the CPI for tonight is quite important. Okay, it can be high impact if the data shows a surprise. All right. So why the CPI is important for tonight, right? So we're going to break it down one by one. Okay, the first thing, of course, is of the NFP setup. Okay, so over the Wednesday, we see a strong job data. Basically, the strong data is already eliminate the possibility of a rate cut in March or April. Right. So we can assume that the rate cut door is now closed. It's now locked, closed and locked. Right. There's no unlikely, very unlikely, will be any chance for cuts in March or April. All right. So the second thing is the CPI will be the key to the lock, to the door, okay, to the no cut door. All right. So now we are seeing that basically the NFP already close the door and lock the door. All right. So the CPI is the one that holding the key. So if the inflation data come in hot or sticky, okay, especially recently, we're also seeing the market is quite afraid of the tariff-driven price. Means we are now seeing the US and the Canada is having another round of trade war, right? Maybe it's not a big one, but it's still a concern for the inflation. Okay, if let's say the things really work out, right? I mean, if the tariff really work out, right? So the CPI is what the risk is the things. Is the one that holding the key. Okay, so whether they're going to throw away the key, okay, whether they're going to throw away the keys, it depends on the CPI tonight. All right. So these are things that we look at. Okay, a sticky or a hot CPI would confirm the no cut narrative, and then locking the door for the near futures. Okay, locking the rate cut doors for the near futures means that there is no cut in April or March. Okay, so this is the case. And of course, this would be the final verdict for the Fed's first half of 2026 policy path. All right. So if the inflations today, okay, are still on sticky or hot, okay, or even higher than the expectations, this would force the markets to face one new reality. Okay. Now we are seeing the labor market is strong, and if the inflation is further rising or still sticky, okay, means that the fight, not the fight, the Fed might not be able to cut rate at all, okay, in the first half of 2026, which means even until June, there might be no cuts, okay. So this is a possible case if let's say the inflation is still very sticky for today, especially we are looking at the Powell. The Powell stance, right? I mean, Powell is more on a very careful person. Is more on a cautious chairman, right? So until Powell stepping down on is June or May, I forgot what was it. I think it's on May. Okay, until May. Okay, step on May. So it means that until May or even June, the Fed may not going to cut until the new the new chairman is coming up, which is the Kevin Walsh. Okay, so at this point, if we are seeing the inflation is high today, basically it will lock the door for the cut, okay, after the NFP. All right, so this would means one thing, right? So the Fed might not able to cut at all, okay, in the first half of 2026. All right, so this is the case. So basically, we can conclude it. Okay, tonight the data will dictate the medium-term trends for the dollar and rates, and of course the US stock markets. So this is one of the things that we're going to cover on later. Okay, why how is this going to impact on the stock markets, especially right now we are seeing a little bit of bearish reversal in the stock markets, okay, in the US indices, right? So this is going to be what we're going to cover on later. All right, so this is the case. So right now let's look a little bit at the CPI for today. All right, so right now we are seeing the NFP for not NFP, the CPI. Okay, the CPI for January. Okay, CPI for January, the consensus data is actually 2.5. Okay, so the previous one was 2.6. Right. So right now we are seeing the market are expecting a mild slowing down in the inflations. Okay, this is the core CPI. Okay, so this, but if you look at the month-on-month or the month-on-month data, market are still expecting the January inflation still going to be a little bit sticky, right? So this is the case. So we can still expect the CPI to be quite firm. Okay, I mean at least it will be unexpected or slightly, as I mean the CPI is going to come in as expected or slightly hotter than the expectations. So this is the most likely case happens. If you look at the non-farm payroll and we look at the other data, all right? So this is the case. But of course, there's one thing we need to be cautious on is on the retail sales data that released on this week. So we are seeing actually there's a slowdown in retail sales data. Okay, so this may suggest that there's potential that the CPI could be coming lower. Okay, so of course we can't exactly predict what's going to come next. So this is this is why we're going to prepare for two scenarios that's going to happen, right? So I believe if the market's having, I mean, there's two potential scenarios. Okay, the first one is if the CPI is coming hotter than expected. Okay, and then the impact on the market will be higher. Okay, and then the other cases is if the markets, if the CPI comes as expected or even cooling down. Okay, so the impact for the US dollar or even the US equity markets may be more limited. Right. So for what we are looking for is we are actually hoping for, if we as a trader, right, we are actually hoping for a more volatile markets. Okay. So to be honest, for me, I would be hope for a hotter CPI. All right. So if let's say there's hotter CPI coming up, the markets might come into more volatilities. So these would provide us more chances to trade the markets, right? So how can we expect it? If let's say we are seeing the CPI is coming hotter than the inflations, right? If the CPI is coming hotter than inflations, okay, this may supercharge the dollar rebound, okay, especially on recently. Right now we are seeing the dollars is actually start to regain above the support area, okay, the resistance zone. Okay, so if let's say the hotter CPI coming higher, okay, the CPI coming higher, this might boost the dollar higher. All right, and this could trigger further pressure over the US stock markets. All right, so this is the reason why, because if there is the hot CPI, hotter CPI higher than the forecast, means that the odd for the cut in June may come down, and this would trigger further pressure on the US stock market, especially on the Nasdaq. Okay, which is they are quite sensitive to the rate cut. The interest rate expectations. Okay, because usually the tech stock needs easy money to support their growth, right? So if let's say there is no longer, if there is no expectations on more easy money, okay, in the short terms, this might trigger an aversion in the US stock markets, especially on the Nasdaq, right? So this is the case that we would expect more volatility if let's say the CPI is coming hotter than expected, right? So this is the first scenario. The second thing is, of course, if the market is, if the CPI is coming in as expected, so I believe that the impact to the markets, especially the US dollar or the stock markets, may be more limited. So at this point, we are most likely going to look at the technical outlook, okay, see how the price action going to be, right? Because of course, the scenario doesn't always work out as what we think, right? Because markets has its own way to interpret the markets. Okay, so we need to look at the price actions eventually, right? So this is just a concept for us to understand what is most likely happen next. So for the first thing, if let's say the CPI is really hotter than expected, we can be more firmly expect that there will be more volatility in the markets. Okay, but of course, if there's cooling inflations or coming as expected, so the impact might be limited because market could still stuck in the middle. Okay, so this is where we can prepare for ourselves, right? So what can be the next thing for the markets? Okay, so this is where we're gonna look into the technical. All right. Okay, so guys have any questions or have any things that you would like to ask or unclear about? Okay, so if because we also have streaming this to YouTube, right? So if you are on the YouTube channel, we are unable to answer over there. So if you guys want, you can please come over to our Discord channel to leave a message or comments over here, so we can respond to it over here. Okay, all right. Okay, let me put on our chart. Okay, so before we go into the technical outlooks, so yeah, you guys have any questions want to ask about, on what we covered just now? Right, so these are the things that we need to look at. So basically, this is the most likely scenario that's going to happen for tonight's CPI, okay, due to all this reason. All right, so okay, so I guess there's no questions over here. All right, so let's go into our technical outlooks and see how we're gonna prepare ourselves for the next week market. Sorry. Okay. One moment. Let me put up some things over here. All right. So for the dollars, so we covered on this now. Okay. So for the dollar charts recently, it's quite obvious. The US dollar is on a downtrend over the medium-term trends. Okay, since the January. Right? So is January? Yes, since in January, we are seeing the US dollars on the downtrends. Okay, and then on the late January, we are seeing a rebound over here, and over here we are seeing the rebound because there's the hawkish Fed comments that supports the dollar rebound, right? So and recently we are seeing the dollars actually push back against over the key resistance area, right? So basically, in overall, we are seeing the US dollar is on a downtrend, right? So is a higher this higher low, and higher high, higher low, higher highs. Now we are in the middle of a downtrend. Okay, all right. So, but of course, the downtrend was basically, I mean, if it looks into more recent trends outlook, okay, we are looking at the dollar finding support near the 96.9, 96.5 support, 96.5 support here. Put it on a bit because we are seeing the support over here, which is the previous breakout level, right? So we are seeing support. So right now, if you're looking at the short-term trends, right, we might notice there is some short inverted head and shoulder over here, right? So these are inverted head and shoulders. Okay, head and shoulders pattern is over here. So right now, after the NFP, okay, there's a potential bullish reversal forms in the US dollar for the short terms, right? So of course, the reversal pattern is actually still a pending confirmations, right? Because we need to see a clear breakout on the 97s, right? So in the near terms, I would expect the dollar to hold around this area. All right. So if the CPI is over here, I mean the CPI tonight is coming hotter than expected, right? As we recover here, okay, this would provide the catalyst that the dollar needs. The dollar needs to rebound or to go into a bullish reversal, right? So this is the case that we are expecting, right? So hotter CPI would supercharge the dollar, right? So means that for the dollar to break out on the current level right now, we actually need to see a higher than expected CPI And over the technical outlooks, I would expect the dollar to hold above the this area, okay, this 96.8 to 97 point of this area. Okay, so this is right now a potential resistance zone. But if there is enough catalyst to support the dollar rebound, we will see the breakout over here. And at this point, we will see that there's more extents to the upside for the dollar. Right, means that if the CPI is coming hotter than expected, we can expect the dollar to rebound. Okay, and of course, if the CPI is cool or is coming in as expected, then yeah, the dollar might go into a period of, might go into extended downtrends or a consolidations over here, right? So at this point, we are still seeing the dollars is on the, unless we're going to conclude it, okay, the dollar is still on the resistance zone, okay? We need to see a breakout to see a further upside, and this need to be supported by the hotter CPI as a catalyst. Okay, so if the CPI is coming hotter, then we could expect dollar to have a further rebound over here, right? So these are things that we're going to look at. But in the broader terms, the US dollar may go into a consolidations, okay, especially the markets now lack of the, any catalyst right now. Okay, so this is the near-term outlook for the dollar. So for next week, okay, let's see if the dollar is going to hold above the 97. If yes, then we will go on a short-term bull trades for the dollar and be cautious on the resistance near this area. Right, so this is the case for dollar. And for the gold, right? So basically, the gold is quite straightforward if you look at the technical. So as we covered earlier, if you guys attend our previous seminar, our webinar on previous week, okay. So basically, we already covered that after the parabolic move in the gold, okay, the sharp rally, sharp pullbacks. Usually, the markets would need some time to digest the market, to digest the price actions, right? So right now, over yesterday, we are seeing the golds actually facing resistance over this zone, key resistance zone, right? So in the near term, still the same. Okay, it depends on how the CPI is going to be. So if let's say the CPI is actually coming in hotter, okay, and then the dollar is strengthened, so we might still see the goals on the wave down over the near terms, where it means there's still potential of pullbacks. But in overall, because of we are seeing the consolidations in gold, okay, so it means that over the near terms, the markets might need some time to digest again. So we are expecting a short-term consolidations for gold, right? So this is all the key level that we could focus on. All right, the first support is actually on 4,009, it's near 4,009, and also 4,008. And basically, for the next week, if you're gonna trade on gold, focus on the short-term opportunities within the range. Okay, so these are all the range tradings that we could expect in near terms. It means that you could go for a short-term longs on this area. Okay, while this would be the resistance that provide us a short opportunities if let's say the goes rebound for the high. Okay, and of course, if we're gonna see the more rally on gold, we would need to have the gold break out on the 5,001 to see more upside towards 5240 to 5,003. Right, so we need to see a breakout over here to have gold move higher. Right, so this is the outlook for gold. All right, so for Nasdaq, this is where we want to focus for next week. So as we covered just now, okay, if let's say the CPI is coming hotter, okay, so means that the market is going to push back on any cards, okay, until maybe on June or after June. All right, so this is actually considered a bearish factor for the US stock market, especially the reasons price action shows that the upside momentum in the next day is actually slowing down. All right, so why we would say so? The first thing is of course for the Nasdaq we are seeing the record high rally was faced with pressure. Okay, over here. Okay, over here, there's double top patterns over here, and basically, this is the major resistance zone for the Nasdaq. All right. So right now, if it looks on the multi-time frames, okay, if you look at, I mean, over the day charts, there's a high over here, double top high, and then this is another resistance over here. So basically, this would be the resistance zone for the Nasdaq. This is the resistance zone for the Nasdaq. Okay, so means that this is actually pressuring the upside on the Nasdaq. And if we look at the short-term technical outlooks, okay, so the first thing I will look at is the reasons trendline breakup. Okay, trendline breakup. And so over here, we are seeing a potential of bearish reversal, especially with the we'll be using for our charts over here. And we are seeing the reasons moving average is actually showing the what we call as the dead cross. Okay, the dead cross. So usually dead cross would means that the trend is moving into a reversal. Okay, from the it's actually from the golden cross forming to a dead cross. Okay, so this would be a sign for a bearish reversal. Okay, and then on the other side is that the 25,000 point is actually a major support level for the Nasdaq. Okay, along with 24750. Okay, this is a major zone for the Nasdaq. This is a major zone for the Nasdaq, and the sell-off yesterday basically put on pressures on this momentum, right? There's putting a pressure sell-off. Let's say we were not able to see the, I mean, if the Nasdaq is not able to regain 25,000, okay, especially if the CPI is coming hotter than expected, then we might see a period of corrections, technical corrections in the Nasdaq, okay, which is the Nasdaq could be pushed lower towards at least 24,000 points. Okay, so this is the Nasdaq case. And of course, if we look at the same thing for the S&P, yeah, same thing for the S&P. Okay, so we are seeing now there's a pressures over the top. Okay, so moving into consolidations, right? So this is sign. This actually the sign of a momentum slowdown. It means that the market is actually going on from the uptrends into a consolidation, right? So when the markets go into consolidation of a period of uptrends, it means that the upside momentum start to slow down. Okay, and the market needs some time to digest or to recalibrate, right? So in this case, we may notice. I mean, we may monitor on the range bound over here, right? So if you are seeing a clear break over here in the near terms, okay, that means that the Nasdaq, sorry, this is the S&P. Sorry, the S&P might still have a leg down for corrections. Okay, especially the same things. Okay, yeah, hot CPI. Right. So this is the case. So for next week, just watch out for the corrections in the US stock markets, especially if the CPI coming hotter than expected. Right. So these are things that we can prepare for next week. All right. And okay, let's see. Okay, dollar, US dollar yen. Right. So for US dollar GPY, the dollar yens. So I will cover, actually, I'm not sure whether you guys looking at the study on our daily analysis, right? So for this, we actually do cover there's opportunities over the yens in recent days, okay? Especially after the USD JPY were facing the pressure over this area, right? So right now we are seeing a strong move over here. So for next week, we are still expecting there will be a short-term rebound, okay? Especially now we are seeing the support level hold, okay, especially and also along with the 200-day moving average, right? So this will be a key support. So for the USD yen, the dollar yen next week, so we could expect a rebound, okay, but be cautious on this area, okay. So if this level unable to hold, then we might still see a strong leg down for the USD JPY. Okay, so basically we can see that there's a bearish reversal patterns over here. So this would be the key resistance for the USD JPY. Okay, so this is where you can focus on. And for euro dollar, yeah, euro dollar is still on the uptrends, but right now we're expecting a consolidations over here. Okay, so this one, let's just see how is the price action is going to be, because for now the uptrend still intact. Okay, but the recent pullback suggests that the markets might go into a consolidation first, right? So for the near terms, let me see. I will be focusing on this area. Okay, this will be the support zone for the short terms. The short terms, what we call the short term supports over here. Yeah, but because of the CPI, because I mean the CPI is still the ones that might dominate the market. So if we are expecting a hot CPI, so be cautious. Okay, the Euro USD might go into a deeper pullbacks at this point. Okay, so be cautious. So I think better to stay away first, unless we have a clear picture of the CPI. Okay, so the pound is almost the same as well. Okay, so a pullback. So this might be a short-term pullback still extends. So yeah, just stay sideways on the GBP USD as well, right? So these are a few things that we're going to cover for today. So if you guys have anything you'd like to ask, oh, no charts. Oh gosh. I think I shared the wrong screens. Damn. Okay. It's, miss out the chart. Okay. Let's go through a quick one again. Okay. So assume dollar. I've been talking for so long and there's no chart. Okay. Okay. Never mind. Let's go through again for a quick one. Okay, because we I've talked almost like 10 minutes without charts. All right. Sorry about that because I share on the wrong screens. Right, so let's go through a quick ones again. Okay, all right. So for dollars, yes, the same things. We're gonna focus on the 97 to 96.8 as a major support. What is it called? The resistance zone. So we need to see a clear breakout above this level to see more upside in the dollar. All right. So the hotter CPI may be the catalyst to support the breakout. But of course, if let's say we are expecting no change or a cooling CPI, okay, then the dollar might still facing a pressure downwards in near terms. Okay, so the next thing, just focus on the 97.2, 96.8 to see if there is any breakouts over here. Okay, so yeah, this is for dollar. And for gold, yeah, like what we say just now, we mentioned just now. So monitor on the technical consolidations area, right? There's a what we call as the ascending triangle forms. Okay, so for the support area is on 4880 or 4009 and 4008. So this is a major support level that will still support the near term consolidations for the gold, right? So for the upside would be on 5000 to 5001. Okay, so in the near terms we could expect a range bound over this area. Okay, so I would be suggesting you to look for a intraday trading opportunities until the breakout of this consolidation area. Okay, especially if you're going to go on a long term, it's not long, I mean, you're going to go on a swing, a long swing, okay, long trading swing, or a long position swing, then you might want to wait for a breakout over this area, okay, to see more upside on the gold. Otherwise, for next week, the gold might go into a consolidation period. All right, so for Nasdaq, like we mentioned just now, okay, too bad we're talking about talking so long without the charts. Right, so the same things, okay, double top over here, okay, then resistance zone over here for Nasdaq. So it means that the Nasdaq might go into a short-term bearish reversal. Okay, it means that on the broad term, it would be a technical pullbacks there's a risk of a correction periods in near terms. Okay, so especially on right now we are seeing the dead cross in the moving average. Okay, and then from the golden cross to a dead cross means that the near-term trend might go into a bearish. Okay, so we will be the purple bags over here for Nasdaq if the CPI come in hotter than expected. Okay, which is could trigger a further pressure on the US stock. Okay, so this is the case. Okay, so this is what we will look at, and for the key level, okay, just let's see if let's say the 25,000 will be held as a resistance. If yes, then we will be expecting more downside in the Nasdaq. Okay, and for S&P, okay, moving into the consolidations.